Welcome back to Let's Talk Tax, the show for growth-minded CPAs and real estate professionals navigating today's ever-changing world of tax. I'm your host, Tim LeMasters. In today's episode, we're giving a sneak peek behind our brand new 2025 tax planning guide. I'm joined by my colleague, Kat Martin, to walk through some of the highlights. Let's get started. Kat, how are you?
I'm good. How are you?
I'm doing good. So this is our first time together, Kat.
Yep.
I'm so glad I get to be your host today. Are you ready?
I am ready.
All right, 2025 tax planning guide. We're going to talk about it. But first, I'd like to just have you give a quick introduction to our audience. Let them know who you are, kind of what you do here. I think it'd be a really good starting point.
Yeah. My name is Kat Martin. I'm a relationship manager for McGuire Sponsel. My role is to build relationships with CPA firms across the Midwest. I've been with the firm about 3 years now, which is crazy to think about. I feel like we blinked and it's been a journey, but a great journey, and I love what I do.
Yeah, we really enjoy having you here, Kat. I know you've been right underneath the umbrella of kind of all the service providers that we have here at McGuire Sponsel, the technical people, obviously. I've got to work really close with you since you started. I know we kind of had you in a place that wasn't for you at the beginning, but we quickly found out that you were a people person. It's been very, very, very successful for you. So truly appreciate that, and it's been exciting to see your growth. So let's talk about the tax planning guide. I know that's what we're here for. That's what the audience is here for. I think it's probably good to start with kind of the basis of the whole thing. What's the purpose of the tax planning guide? Let's just talk about kind of a little bit back and forth of how we got to this point. What are CPAs like about it? What makes sense, when they're looking at the tax planning guide, when to use it? I think those are all good key talking points. So, why don't you give us kind of your background on it and kind of what your experience has been?
Yeah. So even though I haven't been here since the origination, the cool part about my role is I get to work really close with all of our teams and hearing from the technical experts and marketing and leadership how that was created is a really cool perspective to have. So our firm has spent a lot of time and energy to make sure that our CPAs can take it to their clients, show them what is it, how does it intersect with their business, and what does that benefit look like? So there's a lot of effort put in, and I think they'll be very pleased with what we put together.
I know this year it's going to be branded a little bit different. Obviously still McGuire Sponsel, but I think it's going to be like this more industrial feel. I think that's what we're going for. Just because I think it is something that when our CPAs go out to market and they're in tax planning season, there's a lot going on. And so how can we make this something simple for them to kind of take along with them, look at the guide as they're having these key conversations, say, okay, did you do this, this, and this? All right, so let's get into it. Let's talk about kind of how they look at this by practice line. Mm-hmm. We'll start with cost seg. Okay, so when we look at cost seg on the tax planning guide, typically it's going to have a few different things, right? So we'd say it's going to have a trigger, when it makes sense. It's going to kind of the process, our process, what that looks like, so people can really get an understanding. And it doesn't have to be this, hey, well, hold on, we're not sure. Let's call Kat and see what Kat has to say about this. No, it's right here. The process is laid out. The triggers are laid out. Exactly kind of the whole, from stage by stage, the whole thing is laid out for them. So let's talk about cost seg. When does it typically make sense on a cost segregation? Let's say it's a purchase or a new build. What are the triggers that are going to be in there to kind of explain that makes sense for that to be done? Yeah,
so it'll run through if it's purchase, renovation, construction, $750K plus for purchase, construction. Mm-hmm. Anything that amount and above, great time to have a conversation. Even if it's below those trigger points, we're happy to run those numbers. I think that's what people get a little stumped on is it worth your time? It's always worth our time because it could be an investment for their client back into their business.
Yeah.
So for that end, $750K plus is where we usually see that ROI. For renovations, we're around $200K. Again, we can kind of wiggle around. We see those numbers above and below, but we'll be able to run numbers around that.
It typically relies on what kind of property too, right?
Yep.
You've got a shell warehouse, probably going to be north at 200,000 or north at 750. Mm-hmm. If we've got some office space with some, look at some like a retail center or something like that, we might be able to look at a little bit lower of a number. So it always makes sense to run those, right?
Yep.
Okay. Yeah. So let's talk about that too. What type of properties? Is it any type of property? Is it, give me that.
Yeah.
Throw it at me.
Yeah. I think that's the beauty of our tax planning guide is there are many examples of all the industries that we see. And it's not just manufacturing buildings. It's not just a real estate portfolio. It could be high-rise hotels. It could be a variation of different buildings.
Yeah.
So I think that's the beauty of it because it sparks the idea for the client as well.
Yeah. And how does that segue into property tax? So if we get, property tax is going to be on there as well for property tax appeals. How do we segue from cost seg to property tax? What are we looking at there?
So all we need is an address. And thankfully, we usually have that with the cost segregation studies. And our team goes in, looks at it. If they're spending $50K above in taxes, then it makes sense for us to look at. Typically, we would like to see that a little higher. I would say $50K is your minimum threshold, just so that the client actually has an advantage benefit at the end.
But let's say it's not a cost seg that we've done. Let's say it's just a new property. CPA reaches out and they say, hey, I've got a client. Does this make sense? Is it still those same parameters? Are you still looking at $50,000 and up?
Yep.
Okay.
Yep, we're looking at $50K. And I think the beauty of property tax is you don't even have to go to your client yet. You can send us the address. It's all public record. And we can kind of do that background research before even presenting it to the client.
Yeah. So in fixed assets, cost seg, any renovations 200 up, anything from a new build or a new purchase is going to be 715,000 up. Okay.
Yep.
Property tax, we're looking at $50,000 in property taxes annually. Makes sense to look at.
Yep.
It's going to be that simple in the tax planning guide.
Yep.
Pretty straightforward, right? From what I understand, though, I can't see it yet. From what I understand, there's going to be kind of the process portion by practice, and then we're going to have the triggers at the, towards the end. So that'll be something a little bit different this year. So there is this little unique twist on it, but I think it'll be a little bit cleaner once we get to see it in its final stage. So, all right, moving on. Let's talk about R&D.
Let's do it.
All right, so R&D tax credits. Obviously, there's a lot that we could talk about with the new bill. We've already done that on some of our previous episodes, so they are out there if our listeners want to go back to listen to that. But let's talk about triggers for R&D. R&D is one of those really interesting areas because I think this has been something that people have thought for such a long time that, we've got to be, in lab coats,
Yep.
test tubes and beakers, we're in a science lab. That's the only way we can qualify for that. But it's interesting. I just actually got off a call today with custom cabinetry. There's a ton of opportunity there. So let's talk about kind of when it makes sense. What are the triggers you think that are going to be in the tax planning guide that'll help our CPAs navigate this?
Yeah. So when we're looking at newer clients that are approaching the R&D tax credit, we're looking to see, do they have technological uncertainty? So we're sitting in the hard sciences. Like you said, it's not always going to be a test tube. It could be a tool and die shop. It could be a manufacturer. I just had a medical device company that we were able to create a credit for. So there's different parts of the code that allow us to look at different industries.
Yeah. What about employees? Is there some triggers there? Can we say, okay, certain types of employees may warrant a conversation?
Yeah, definitely engineers. We see a lot of R&D activity with our engineers.
Yeah.
We want to shy away from salespeople unless they are coming back bringing knowledge from the market so that we can create prototypes and things like that.
Yeah, so you're not looking at market research, you're not looking at business research, you're more looking at that technical research.
Yep.
So, and then you kind of, I think some other ones, you get some designers, you got software developers, those are some areas that you can really look at. So I think there's going to be kind of a list of, what type of employees make sense to at least have a conversation. So, all right, location advisory services.
Yeah.
I think this is an area where it can be challenging. Even though they have the tax planning guide, it can be a bit challenging just because, when you're in and you're doing full-on tax planning, growth opportunities don't always come into mind. But it's wild. I feel like we have more LAS discussions in Q4 and more people signing up to do that type of work in Q4, even though it's not an area that is usually talked about just because we're talking about taxes owed, the planning portion of it, and then we're finding ways to figure out tools to utilize to save on tax. And so let's talk about LAS and how we can approach this in with the tax planning guide. What are some of the areas in our tax planning guide that are going to kind of focus on LAS? Maybe you can walk through that just a little bit,
Yeah.
what that looks like.
Yeah. So for LES, we're looking for growth, which I think is the exciting part of the business. And I think, as you alluded to in Q4, that's more of a focus. And I think it offsets what you have to talk about, the taxes owed, and it creates a lot more excitement and drive. But for LES, we're looking for anyone growing, expanding, adding jobs. Acquisitions are a huge trigger as well. We've seen a lot of uptick in location advisory opportunity because of the tariff conversation. A lot of companies are coming back into the States. So how can we add opportunities to the client and incentivize them to go to certain areas?
Yeah. Now, what type of industry? See, this is the thing that I think people get stuck up on. And you'll go out, you have a great meeting, conversation, or you meet with some CPAs, and we're talking about LAS. And next call is they call you, I got a restaurant, they're getting ready to build a new one.
Yep.
Let's talk industry, because this is very, very important, right? And I always try to lead with, where's the money coming from for this business? Is it coming from competing dollars in the local area, or are they generating their revenue outside the city, outside the state, is usually what I like to say. So let's talk industry. Focus on that.
Yeah. So for restaurants, typically a no-go because they're going to follow the traffic pattern. I mean, think about your commute to work today. All the strips of restaurants are in the same area. So there's really no incentive in that arena.
Yeah.
But outside of that,
Property tax. But yeah, go ahead. Sorry.
great property tax opportunities. Yeah. But outside of that, manufacturing, I mean, I don't want to say a slam dunk, but extremely incentivized because you're creating economic drive into cities. You're bringing in jobs, and we want to see how they are paid, because if you can bring in high dollar wages into that city, well, that'll create economic growth. So we will definitely be looking into that. I think a lot of people do get caught up on the industry side outside of the restaurant arena. It's always worth a conversation, especially if we can get ahead of the game before they make any decisions. We always say that we love a whiteboard conversation because we're looking ahead.
Yeah.
And for our CPAs, it shows their clients they're looking out for them in the future years.
Yeah. Yeah, you've had some pretty good success in that area too. So I think it's something that you've, with what you've had going on with the LAS practice, I think it's an area that comment that you just made, the way you kind of walk through that, it makes it a little bit easier.
Yeah.
So I think maybe simplifying it, realizing that there's opportunity not just for the Amazons of the world, okay, but your mom and pop shops, your everyday manufacturers, technology companies. You look at logistics; that's a good area. I mean, even consulting firms. I mean, we've even seen some consulting firms take advantage of it just because their expansion across the country, looking at different areas. Where's the revenue coming from? Again, I'm tying those dollars across, right?
Right.
So I think this is one space that, man, if we can latch onto this early on, and you're right, conversations a year or two in advance are beneficial. You get into that 2-3 month window, it's a little bit tighter turnaround, just because they're usually economic development groups are having these meetings, once a month.
Yep.
And so we've got to be involved in those meetings early. So if there's any growth plans, basically, that you're saying, there needs to be a discussion.
Yeah.
Okay.
Yep. And I think our tax planning guide will make those conversations easier.
Yeah. Okay. All right. So final thought here on GBS. So last but not least, international tax. I think this is something that we can focus on by, I would say by line, because we have multiple lines in there. Let's talk about IC Disc first.
Yep.
IC Disc has kind of been the stepchild here for a while when it comes to GBS, just because of the arbitrage and how people think it's not as beneficial. It's still free money if you look at it. So when you look at IC Disc, when does it usually make sense to have a conversation?
So if you have a client that is exporting over $2 million in supplies, then that's a great conversation starter.
Okay.
So if you have a manufacturer, I just had a client reach out last week asking, hey, I have a client that has supplies that goes down into California and then goes to Mexico. What does that look like? And does an IC disc apply? So it's always great to have the conversation. I know we say discs are old school and back in the day, but they actually bring great opportunity to your clients.
Oh, they're very
still
relevant
today.
Absolutely, they're very relevant. And so I think what you were talking about, there's two different sides of it. There's direct exports and there's indirect exports. So if Tim Manufacturing builds a part of an engine and I send it to Cat's engine, or Cat's Motors, okay, and Cat's Motors takes my part, puts that on their engine, and that ships out outside the country, that would be considered a indirect export. So there's opportunity there for the IC disc as well, is kind of what you're alluding to.
Yep, you would be correct.
Okay, so also the $2 million, that's the threshold, but profit margins really play a toll in that as well. So if we have high margins, all right, I think that $2 million can be lower.
Yes.
Okay, push through IC disc, and then let's move into transfer pricing.
Yeah.
Talk about transfer pricing. When do we need to focus on it? Is this something that is not that important? I think there's a lot of questions of, do I need to do this? It's just compliance. What's it going to show in the tax planning guide?
Right. Transfer pricing studies are important. You do need them if you have intercompany transactions, and they have to be dealt with at an arm's length. And I know we all say the IRS is struggling with employees, but aren't we all? And we all are also using AI. So they are tracking that and looking to make sure, even if $1 is filed in your return saying you have an intercompany transaction, they're going to look and see if there's a transfer pricing study.
Technically, you're going to have one.
Technically.
Do you need one for $1?
Probably not.
Okay.
Probably not.
All right.
You would be right, yeah.
We don't want to push the envelope too much here.
Yeah.
So technically, you would need to have one, but usually it makes sense when there's more intercompany transactions. It's $1. But as it states, it doesn't give a dollar amount. It says any intercompany transactions, basically.
Correct.
Okay. So we're looking at that. Transfer pricing studies. I've noticed that there seems to be a little bit more scrutiny on these as well. So I do believe you on the AI portion of it. I know we've talked about that in past episodes. The AI is scrubbing Schedule M's, looking for that intercompany transaction. If they see those, they can request a transfer pricing study. If you don't have one within 30 days, usually not a good thing.
Yeah.
And if you request for more time, they know you don't have one. So we're seeing a lot of this happening across the country right now. So I would say transfer pricing is a key area of focus for the IRS. And when the IRS starts to get savvy and gets AI equipment, I think they still have fax machines over there. So they're using AI to look at this. They're definitely focused on it.
Yeah.
Let's talk about compliance real quick. What are some of the things that CPAs need to be looking for? You know, is there forms they can find? Is it something that we just do review? How can we support that?
Yeah. So I think in the guide we'll list different forms that we see often and that we can help with. I'm not sure if we're going to allude to how we approach that with our CPAs, but it's by how the CPA wants help. And we can fully come in and prepare those forms. We can come and review, add comments. It just depends on the expertise. We have some CPAs that say, hey, I saw international pop up. I don't want to touch it. Or I've had a little experience in my previous days. I want to try to prepare it. Can you review and give me comments? So there's different layers to compliance forms on how we can approach that with our CPAs.
Okay. Yeah. I think a final takeaway, when our CPAs receive the tax planning guide, what's one action a CPA can take when they receive this with the top client using the guide, and how can they work that in conversation? Brain buster of a question, but I know you got it.
Yeah. I think it would be a great idea to sit down, give us a call. Hey, I have a client I'm thinking of. I'm looking through your guide. Here's what I'm thinking. Can you provide any additional thoughts?
Yeah.
I think that would create more confidence into the CPA as they're going to their client. Because like you said, if they're going to one of their largest clients, they want to be confident when they're bringing it to the table. So I think that's a great starter point.
Well, I think we also offer a ton of tax planning guide presentations as well. This is something that our marketing team did a really good job of last year, of putting a full kind of breakdown of the tax planning guide. I believe it's going to have an update. It's going to be similar this year. And so we could spend a lot of time doing a lot of roundtables. This is not Kat stands up in front of a room and talks at a group of CPAs and says, this is how it looks. It is literally getting in there, open up the tax planning guide and just going through it page by page, breaking it down, having open dialogue. It has been really, really successful. I know we did, gosh, I couldn't tell you how many did we last year, because last year was really the first full year we rolled this out.
Yep.
And I bet you we did probably a dozen to 24 tax planning guide roundtable discussions, and it was like overnight. Things just took off. So, if you're listening to this, I would encourage you, take advantage of that. That is I think a home run for both parties, just being able to have an open dialogue and open discussion when it comes to tax planning guide, so that we can break it down and make it super simple.
Yeah. And it creates that collaboration as well, which we all enjoy.
We do, yeah. Well, that's our favorite part. So.
Yeah, that's our favorite.
Well, Kat, I really appreciate your time today. It was such a pleasure talking about the new tax planning guide coming out with you. I think for our listeners, they to understand that this is something they can take full advantage of. Don't hesitate to reach out and have conversations about it. This is definitely a tool to utilize, something very, very important, I think, that would help you kind of walk through all these conversations with your clients, because we're all looking at saving money for our clients, right? The end user is the most important. They're paying all this tax. How can we reduce the tax liability? That's the biggest thing. So I appreciate you walking through that with us, because I think it broke down, even though we kind of got off and just kind of went on these tangents, I think it broke down each section of the tax planning guide. It makes it a little bit easier for our listeners to understand.
Yeah.
So great job, Kat.
Thank you. And good luck with tax planning season.
Yeah. Best of luck during tax planning. And we appreciate it. Thank you for taking time to tune in today. You can subscribe to the Let's Talk Tax podcast on YouTube and follow us on Spotify or Apple Podcast, or whatever you listen. In addition, today's show notes and links to more about the episode can be found online at McGuireSponsel.com/Let's Talk Tax Podcast. We'll see you next week. Thanks, everyone.